Welcome to The Business. I'm Lanre Akinola. On this show, we break down business and its impact on Africa and Africans. Business affects every one of us, whoever we are, wherever we are. This week on The Business, the European Bank for Reconstruction and Development puts its expansion plans on ice. The bank won't make a decision on moving into sub-Saharan Africa until at least 2020. Sub-Saharan Africa gets another warning on debt. The IMF says growth is up, but so is debt distress. Saudi Arabia plans to supply Sudan with oil on credit to tackle fuel shortages. The kingdom would supply 1.8 million tons of oil annually as part of a 5-year deal. This week's big story is Nigeria finally about to pass the Petroleum Industry Bill. The Senate president thinks so. And in the breakdown, we look at how China is changing the global donor landscape. Joining me throughout for commentary and insight is Vuyiswa Ngobongwana, broadcaster and Africa watcher. And in part 2, I'll be talking to Ugo Arinze, CEO of Onyx Property, about the London property market. Last week, the European Bank for Reconstruction and Development said it was planning to expand into Africa. This week, it's saying that it will not decide on expansion into sub-Saharan Africa until at least 2020. The plan wasn't too popular with some of its shareholders. It seems Europe can't quite decide what kind of relationship it wants to have with Africa. This is another illustration where we're hearing some people pushing for more economic engagement with the continent, but then there's this aversion to Africa. There's a lot of anxiety around migration from Africa in Europe. It feels like they can't really decide what to do here.
They're quite happy in North Africa. The hesitation to go to sub-Saharan Africa is more rooted in a clear understanding that those economies are completely on the edge of survival precisely because of the economic mechanisms created by Europe. I mean, this is a circle that keeps going round and round and round. So
except anybody in Europe or the European Union is interested in having some sort of healthy relationship with Africa.
Of course there are people interested in having a healthy relationship, but it's how you work against a behemoth of an economic mechanism that is imploding on itself. But eventually they have to go into sub-Saharan Africa because where else is there?
Where else is there indeed? Sub-Saharan African nations must be careful to avoid debt distress, says the IMF. Only a few weeks after the World Bank said the same. They're not the first. This is turning into one of the big stories of 2018. Debt. It was just 13 years ago that we had the major rounds of debt relief. Tens of billions of unsustainable debt was forgiven, was written off by the West. Here we are again now. There's talk of rising debt levels, rising debt service levels, and far from reining in the borrowing, African countries are binging on borrowing. Should we be worried?
The practical reason why Africa is not able to manage what money she does have is because of infrastructure mechanisms and governmental structures that are basically not ready to deal with the level of sophistication that comes with the terms of that borrowing. And so Africa goes deeper and deeper into debt. It wouldn't be surprising to me if in another 3 or 4 years, we had another debt wipeout scenario. Because how is Africa going to repay this?
How are we ever going to solve this cycle?
A re-evaluation of the very foundational basis of the system. And I think perhaps for Africa, as we will discuss later on, the emergence of new players or younger players like the East and also South America.
We will be getting into that later in the show. Debt, one to watch. Sudan is discussing a 5-year deal with Saudi Arabia to help tackle a fuel shortage. This is part of a wider reform drive by Khartoum. Now, Sudan for many years has been a bit of a pariah, not just internationally, but even within Africa. Late last year, the US, after 20 years, finally lifted economic sanctions on Sudan. And we've seen quite an interesting turnaround there where there's talk of liberalization, there's talk of going back and on the topic of borrowing, going back to international lenders. And this is the latest sort of illustration of the kinds of deals that are being struck here.
Yeah.
What do you make of this?
Well, from Khartoum's point of view, they have no option but to look outside of Sudan because their long exploitative relationship with the southern half of herself, because it is one nation really, has created this scenario where they have sought independence and gotten it. All right, they are struggling, but now Khartoum is in the position of thinking, what about our long-term future? So this rebuilding with Saudi Arabia makes complete sense, as well, of course, as the strong link with the Islamic faith.
Now, Sudan is a bit of an underrated economy in Africa. I think it has like the 4th or 5th largest economy, has a decent-sized population. So could this be the beginning of maybe a bit of an economic upturn in the East African country?
One would hope so, you know, if Sudan can actually find a way of linking with other African countries, like all African countries. The very basis of their economic poverty has been divide and rule. So as long as there can be more examples of intercontinental economic cooperation, that is the only way forward.
Interesting times ahead for Khartoum. This week's big story is that Nigeria's petroleum industry bill might actually pass by the end of July. If you believe the Senate president, that is. Viswa, I don't know how familiar you are with this story, but we're getting close to 20 years on something called the Petroleum Industry Bill in Nigeria, which is supposed to completely reform the oil sector. Now, Nigeria's oil sector is notorious for graft, for bad governance, for corruption and all this. It's taken almost 20 years to get here. Now the Senate president is saying we're gonna pass it by July. Sounds pretty optimistic.
Oh, this is the kind of electioneering talk you'll be hearing right up until the elections actually happen. You know, people are being called up for fraud. Nigeria appears to be putting her house in order, but I have zero confidence that that will be passed because the reasons why it wasn't passed haven't actually been dealt with.
And then, of course, there is the big question of actual implementation. Passing a law is one thing. Applying that law is a completely different exercise. And here, too, Nigeria, like it or not, doesn't have a great track record of actually enforcing the rules that it sets, even if they're really good rules.
No, it doesn't, especially when everyone has been tainted with, you know, the accusation of corruption, imagined or otherwise. Everyone is pointing fingers, little recognizing there are three pointing back at them. And that's Nigeria in a nutshell. I have no confidence that this will go forward. Election talk, nothing
Now,
more.
the problem, of course, is all the while the country's oil wealth continues to be mismanaged. It continues to not go into the places where it's urgently needed. How can Nigeria meaningfully start to actually address this issue of harnessing its oil wealth?
I think the only way it happens is the only way it happens anywhere in the world, you know, with more agitation internally. You know, you've got the Ogoni people in that region really agitating for, well, a piece of their land, effectively. And the more agitation can happen all over the place, it forces central government to really address the issue.
The evidence suggests it will be some time. In this week's breakdown, as Kenya becomes the third African country to join China's Asian Infrastructure Investment Bank, we look at how Beijing is changing the global donor landscape. We all know that China is a big deal in Africa. China's been investing all over the world. Africa's been a big part of that. What's starting to come through is that China is also becoming a big player in the development and aid space. There was some research out late last year which showed that I think over the last 5 years or so, China has given out almost as much aid money as the US. So it's kind of up there now. One important difference is that Chinese aid doesn't come with a lot of the conditions that are attached with Western aid, which has, of course, faced a lot of criticism in Africa. Do you think this is a welcome shift, seeing countries like Kenya, you know, pivot towards the east, pivot towards Beijing to finance some of the development needs?
Now, with China coming in, they're coming in there as economic partners. Okay, it's up to us to use our discernment to try and get a better deal. In fact, from what I've been able to research, all the deals that have been struck have been much better than anything that the IMF and the World Bank has offered Africa thus far.
This idea of negotiating as equals, and China has really pushed this, and as you say, and the evidence is kind of there, you know, there is a lot more back and forth, but you also make that key point that African countries need to be very vigilant here.
Now, for Africans, we have to look at the world as just one big table. Where can we get our best quality nutritional food? And it looks like the East is definitely much more nutritional for Africa than the West has been thus far.
What do you make of criticism in the West West of Chinese aid, where a lot of people have said, oh, this is self-interested, they're not going there, you know, they don't have the right moral compass.
Of course it's self-interest. How dare anyone...
like Western aid, right?
But I would call it obfuscation, to stop Africans looking more clearly at what exactly are the nitty-gritty mechanisms in this Chinese relationship. And they aren't as negative as the Western propaganda would have us believe. Check Zimbabwe.
Okay, so this gets the thumbs up.
Absolutely.
All right,
yes.
Great. Thank you, Voiswa.
You're welcome.
Like it or not, Chinese aid is here to stay. Join me in part 2 when I'll be talking to Ugo Arinze, founder of Onyx Property Consultants, about the London property market. Hello and welcome back to The Business. I'm Lanre Kinola, and on this part of the show, I'm going to be talking to Ugo Arinze, founder of Onyx Property Consultants, about the London property market. Ugo, welcome to the show. Thank you very much for joining me today.
Thanks for having me.
Now, London, it's a global city. It's a city that's known for many things, including its property market.
Absolutely.
It's one of the most expensive cities in the world to buy property, but it also attracts a huge amount of international interest.
Absolutely.
This is your bread and butter. Give us a bit of a sense of where the London property market is today. What have been some of the key trends we've seen over the last year or so? There's been a bit of a dip in prices. What's that doing to some of the market dynamics out there?
Well, definitely, we have seen a correction in the market, but the real estate market has always been a cyclical market, means that it corrects over the years. So what we are seeing is prices have come down off of their historical highs from about 2015. From our perspective, it gives buyers certainly a great window to take advantage of that. There's a lot of headline noise as well, and what we find is that on a market to sub-market basis, people really need to kind of peel through all the noise. So from a dynamics, and certainly to the African consumer, London has been a market that they've been very comfortable with. Certainly Nigerians have been buying into this market for generations and have come here to study and been connected to London. So we still see that as advantageous to them. But yes, we've seen price corrections. We're seeing things taking longer to sell, obviously, but we're still faced with low historical interest rates, so offering still a good opportunity.
You touched on Nigeria, you touched on demand out of Africa. Won't come as a surprise to many to hear that Nigerians have invested a lot in property in the UK. Right. What are some of the dynamics you're seeing around that? I know you've personally done quite a lot of work in Nigeria. Yeah. Are you seeing demand out of other African countries? We've had a decade or so of growth on the continent. There are more wealthy people on the continent now than there were back in 2000. Where else is the demand coming from? Is it just out of Nigeria? And what have been some of the dynamics in Nigeria over the last couple of years? Because it hasn't been an easy time.
Yeah, no. Well, obviously, the UK has a unique position in terms of its connection to Commonwealth countries. So again, places like South Africa, Kenya, Ghana are other key African consumers that have bought into the London property market and still will be interested in buying it if the situation is right. Particular to the Nigerian buyer, where we would have seen them taking more advantage of the correction in the market over the last couple of years, they've been faced with some of their own domestic challenges, such as the devaluation of the Naira, making it more expensive to buy and convert money from Naira to pounds. We've seen, obviously, oil prices come down significantly. We've seen restrictions on their ability to take capital out. So those have been kind of the key things that have restricted their ability to buy in, even though the interest has continued to be there. And a lot of that interest sometimes is fueled by virtue of sending their children to secondary school, to boarding school in the UK, and then wanting to have a base here, a property asset, which is part of their overall investment portfolio, which makes sense.
You mentioned the Commonwealth, and this is part of this Brexit narrative, this narrative around Brexit, that after the UK leaves the EU, there's this desire to increase economic and commercial ties with Africa. Do you see that as a platform? Do you see that becoming more relevant in the coming years in a place like London? I mean, is there any, how excited are you about this prospect of the Commonwealth becoming a thing again for the UK? And do you think it's going to meaningfully change things?
Well, I think people should see it as an opportunity, right? Because one of the things when I moved to London, I fell in love with was the culture here. And London has been a place that has historically been very welcoming. And it's a place where I think everyone feels a sense of community and connection. So if you are from the Commonwealth, you can find one of your own in London. And that should be a starting point in order to consider investing here, making it a base, and taking advantage. So if we see a decline in the European connection, then yes, there's a void to be filled here, and then Africans should be taking advantage of it. Obviously, from where I sit from the property sector, I see property as a legitimate value proposition, an investment opportunity, along with everything else to build a portfolio of wealth and sustained income over years to come. So it's something that we encourage our buyers to consider and to analyze and make sure that when they're going in, they're doing their homework.
What are some of the obstacles to getting Africans to invest in property in a city like London? So things like anti-money laundering regulation in the wake of the financial crisis has obviously been tightened. In the wake of 9/11, there's been a lot of tightening. Is that putting a bit of a cap on how accessible the London market is, say, for a Nigerian or an Angolan or a South African? Because whether we like it or not, Africa is often tarnished with this brush of being less trustworthy than other parts of the world.
Yeah. Well, I think the good thing is we have banks, African banks, in the London property market. So we do have banks who will lend to Africans based on their income and their assets back in their home country. So that's really exciting. But yes, at the end of the day, but it's not just Africans, it's Russians, it's other people that the UK has basically stated very clearly that through anti-money laundering, know your customer, they want to make sure that the money coming into this country is clean, as it should be. So we as agents, as estate agents, as property consultants need to make sure we understand the source of income, where that money's coming from, and who that profile of that customer is. So I don't think if you have nothing to hide, there shouldn't be an issue. It might be a bit more cumbersome, but that's again where we advise clients to make sure that we're working with buyers, that we preempt a lot of that on the front end. We take that information so that we fully understand and can present them as legitimate buyers that are able to move quickly. And with partners like the African banks, as well as others, then financing should be available at the right terms, and they're able to purchase and acquire assets in this country.
Now, one of the things most people know about the London property market is that it's expensive. So expensive, and it's become a lot more expensive in recent decades, to the point where there's this question around, well, who's really buying property? Who can afford property? What are some of the dynamics you're seeing there? Because one of the key priorities, at least in public, what politicians publicly say is they need more affordable housing in London. It needs to be made more accessible. We've got too much foreign money coming in. Is that a problem you run up against? Is that something that factors into your day-to-day work? What are you seeing on the ground?
Yeah, look, I think that there are some fundamentals as far as London has a housing shortage. However, the government has seemed to go after, I think, unnecessarily the wrong targets, because where I think they should be putting their focus is at creating actually more affordable housing. How do you do that? Building more housing and actually staying ahead of those figures, their own targets that they've set. How do you do that? Maybe you work with developers to make sure the land is more affordable. Density is increased as they create, new units, and making sure that there's a mix of affordability in that. And you can do that through tax incentives, financing options, and what have you. Coming from America, we have 30-year fixed mortgages here. So if you really wanted to make housing more affordable, you could look at extending fixed rate mortgages and the affordability factor in the amortization term, so that really people can afford more housing for their money. And you could restrict that to who you offer that to. Certainly, affordability is an issue, so that in terms of when you look at wages relative to housing prices, that has been distorted over the last 20 years. But there's always opportunities. People ask me that quite often, where is the smart money going? We do talk a lot about the Elizabethan line, the new Crossrail, so that places that perhaps were an hour away are now going to be accessible into central London within 20 minutes. Areas like Croydon, which are a little bit further out, are certainly getting a lot of regeneration money. Places like Tottenham, places like Lewisham. So if we really do our homework, and that's where we work with clients to make sure we can peel through some of that noise and look specifically at what are you trying to achieve, how can we help you do that, and then we go strategically to make sure we can find those opportunities. And there are still opportunities out there.
Does the market need more rebalancing? You've spoken about distortion, and would you like to see a bit more rebalancing?
There's always corrections, and so again, I've been in the property market for a very long time, and what we recognize is every 7 to 9 years the market corrects, right? You just can't have an endless uptrend, and so we're pretty much 7 to 9 years on from 2009 and what have you. So yes, the market always needs to correct, and so this is part of the normal course of things. We just talk about, are you ready to take advantage of that? And when we're advising clients now, this isn't about a flip strategy. This isn't about a short-term strategy. If you take a long-term view, I still believe that the long-term fundamentals of London are sound.
Last question.
Okay.
You say long-term view.
Yeah.
How long-term can you think with the deadline for the UK to leave the European Union in next March? It's less than 12 months from now. Are you worried about this? Are you concerned about this? Do you think it's going to have much of an immediate impact on the property market in London?
I think Brexit is personally a mistake. I don't think it's been that advantageous in everything we've seen. I don't see the real fundamental argument for Brexit. I hope and pray that it, however it looks in the next couple of years, it's still going to be a welcoming place for the world. And so therefore we advise based on that because again, when I look at the fundamentals, this is a housing shortage city, so therefore that's the starting place of supply and demand. So when we talk about long-term view, we talk about 5 to 10-year investment criteria, and if you're buying to raise your family or to have this as a family base, it'll still be a place that's worth coming into.
Well, unfortunately, we've run out of time, but thank you so much for joining me on The Business today.
Thank you. My pleasure. I hope to come back.
That's all we have time for. I'm Lamri Akinola. Thank you for watching The Business. Please join us again next time.